Hi, I'm Jim Juback, and welcome to my Trend of the Week video. Trend of the Week this week is Tesla's bad news is probably even worse news for other car companies in the electric vehicle field. Okay, yesterday, or actually on Wednesday after the close, Tesla came out and announced, a slight miss. They were supposed to report 73 cents a share. They reported 71. Revenue came in a little light, but the real important thing is that when they talked about guidance for the next year, they said, well, sales grew at about 38% in 2023. That's below the 50% target that Tesla always talks about. And that in 2024, we're probably going to see less than that. Wall Street says not only less than that, but substantially less than that. Wall Street's estimate for sales growth in 2024 for Tesla, 24%. Okay, that's the old news. What I want you to do is to think about Tesla as being the target that companies like GM and Ford, Volkswagen are shooting at. And this is really bad news for them. Because if you think about it, let's say you're the CEO of Ford or GM, and you're sitting there going, okay, we need to get into electric vehicles because that's where the future is, and here are the cost parameters. Oh, we can't manufacture a car as cheaply as Tesla does, which can't manufacture a car as cheaply as BYD does in China. But hey, we know what their costs are. Here's our target. We're willing to take X amount of loss to get into this market, and then gradually, as we ramp up production, we'll see a profit. However, that was all on paper, and that was before Tesla started to try to goose sales by cutting prices. And it looks like if you're seeing slower growth, you're seeing Tesla probably have to cut prices more. Tesla's now in competition with the Chinese automakers who have lower prices. So all these factors are saying to a GM or Ford CEO, hey, the paper exercise that talked about how much pain we're going to have to take to get into this market. Those paper exercises, well, throw them in the fireplace, shred them, whatever. They're no good anymore because the margins for all these companies that are profitable, like Tesla, and there aren't very many, are coming down. And now we're looking at more pain for us to get into this market. And that's why you see Ford and GM cutting back on their capital spending, and they're lengthening their plans for this, because basically what Tesla has said to them is, hey, more pain for a longer period of time if you want to get into this market. And GM and Ford have basically both said, well, not that much pain and not right now. Thanks so much for watching. If you enjoyed this video or found it useful, you can subscribe to my YouTube channel. That's free, and you get notification if you sign up. Every time we do a video, we're doing about 3 a week. If you like my stuff or you want more of it in written form, you can go to my jubackpicks.com site, and that's free. And we do 3 portfolios. That's for 12 to 18 months, for 5 years and longer, and for dividends, and it's free. Or you can subscribe, and I got 6 portfolios where we do some really longer plays, even than 5 years, where we do some volatility, where we do some options. There are 6 portfolios on that site, and you can find links to all of those down below. Thanks very much for watching.